Bitcoin hitting $140,000? Altcoin season incoming? Experts weigh in on market trends, institutional moves, and regulatory hurdles. Find out what's next for crypto. In the latest video from Altcoin Daily, Bitcoin dipped to $17,000 from a high of $112,000 due to President Trump's tariff threats on the EU and Apple. Despite the drop, the host remains bullish on Bitcoin, pointing to decreased Bitcoin balances on exchanges as a sign that institutional investors are driving the market and the masses haven't entered yet. The video also covers President Trump's Memecoin dinner with top holders and discusses upcoming crypto regulations, including the Stablecoin Act and Market Structure Bill, which could pave the way for institutional and sovereign wealth investment in Bitcoin. The host concludes that the dip presents a buying opportunity and that regulation, like the Stablecoin Act passing with 66 votes in the Senate, will benefit Bitcoin by potentially classifying it as an asset. After a quick search, it seems the initial price drop mentioned, $17,000 low and $112,000 high, are not accurate to the real Bitcoin price action during that time. It's important to verify information from YouTube videos, especially price predictions, with other reliable sources before making investment decisions. The discussion about institutional involvement in cryptocurrency markets and pending regulations does reflect broader discussions happening in the crypto world, but it's crucial to remember that regulatory clarity in the US is still evolving, and the impact on prices is speculative. In the latest video from Crypto Rover, Bitcoin's current cycle mirrors past ones, suggesting an altcoin season is coming in the final 2 to 3 months of the Bitcoin bull market. He predicts Bitcoin will reach $140,000 by September 2025, with major altcoin gains during summer 2025. He points to previous cycles where altcoins saw gains of 1,800%, Ethereum, and over 200% total altcoin market cap excluding Bitcoin and Ethereum. He's currently long on Ethereum and suggests using platforms like Pinex to copy his trades or set up your own bots. He advises watching indicators like CoinGlass and funding rates to time exits. Crypto Rover's prediction aligns with some current market sentiment. Recent articles highlight growing institutional interest in altcoins, particularly Ethereum, as the DeFi and NFT sectors continue to expand. However, it's worth noting that regulatory uncertainty still casts a shadow over the crypto market. The SEC's recent actions against some exchanges demonstrate the volatile nature of this landscape. While historical patterns can be informative, they don't guarantee future performance. It's fascinating to see how these predictions play out. In the latest video from Lark Davis, he talks about how institutional adoption, not retail investors, is driving Bitcoin's price up. He points out that Google searches for Bitcoin are down and the Coinbase app ranking is low, indicating less retail activity. Over 108 companies hold Bitcoin on their balance sheets. MicroStrategy holds a large chunk, but others are increasing their Bitcoin holdings. He predicts publicly traded companies will buy up to 1 million Bitcoin, possibly by the end of the year, pushing prices to $200,000 to $300,000. Lark also discusses nation-states accumulating Bitcoin. The U.S. leads with approximately 190,000 BTC. He mentions rumors of China starting a strategic Bitcoin reserve and the UAE's sovereign wealth fund investing $500 million in Bitcoin. He also talks about upcoming U.S. states' legislation to allow them to buy Bitcoin, including Texas. Lark's view on institutional adoption driving Bitcoin's price seems accurate based on recent news. For instance, BlackRock's Bitcoin ETF application renewed institutional interest, and MicroStrategy continues to purchase Bitcoin, adding to their substantial holdings. While retail interest may seem low based on App Store rankings, other metrics like on-chain activity could provide further insights. The regulatory landscape, especially in the U.S., is a crucial factor to watch as it could significantly impact institutional involvement in the future. The entrance of nation-states into the Bitcoin market is certainly a development to observe, but the data on their holdings needs more transparency. In the latest video from Ben Cowan's channel, he discusses the possibility of a Bitcoin pullback after the recent Golden Cross. He points out that this has happened in past cycles, including last year, and often leads to a 10 to 15% dip. However, he acknowledges that it didn't happen in 2023. He observes that Bitcoin's price briefly touched the trend line near $112,000 around the Golden Cross. Considering potential scenarios, a drop to $100,000 is possible, and he suggests observing Bitcoin's performance during the upcoming Bitcoin conference, where historically there is a pre-conference rally and a pullback during the event. He also notices the pattern of Bitcoin's high and low and predicts a similar pattern as in 2023, with a potential rise followed by a decline before a final push upwards. He concludes that while buying during golden crosses might not be immediately beneficial, death crosses don't necessarily mean a sell-off is the right move. Then Cowen's analysis provides a balanced perspective on Bitcoin's potential trajectory. Recent news articles highlight the growing institutional interest in Bitcoin, which might act as a buffer against major corrections. While a pullback is possible, the overall long-term trend seems positive, supported by increasing adoption and technological advancements in the crypto space. However, the market remains volatile, and external factors like regulatory changes could influence short-term price movements. In the latest video from Coin Bureau, Guy discusses the impact of Donald Trump's crypto activities on U.S. crypto regulations. Trump's involvement with meme coins and the $1 stablecoin, alongside concerns about potential conflicts of interest, has sparked controversy among politicians. This has led to pushback against the Genius Act, a bill aimed at regulating stablecoins. While the act initially had bipartisan support, it faced opposition due to Trump's crypto ties, with some politicians even calling for an ethics probe. Despite passing a Senate vote, the bill's future is uncertain, particularly in the House. The video notes that World Liberty Financial got a $75 million investment from Justin Sun, while some are speculating Sun holds over 1.4 million Trump meme coins. Based on recent news, the regulatory climate surrounding crypto in the U.S. seems uncertain, while some, like SEC Commissioner Hester Pierce, suggest a more lenient approach to tokenized securities. The political turmoil surrounding Trump's crypto involvement adds a layer of complexity. It appears that the future of crypto regulation in the U.S. might be a tug-of-war between fostering innovation and mitigating potential risks associated with political influence. It's a fascinating development to follow, particularly given the potential impact on stable